Hello, Warriors. How's everyone doing? TGIBF. Everyone? Anyone know what TGIBF means? Take a shot. Here's a clue. Look at the chart I'm showing. Any guesses? Instead of TGIF, TGIBF. Like boy. All right, going once. No, close, Zig. At least you tried. Thank God it's Black Friday. That was a good guess. It's Bloody Friday. All right, so I don't know about you guys. Are you going to want to go home long stocks over the weekend? Anyone buying this dip right here? All right, because we're piercing on the daily. This is a weekly, the 50 week. You know, all we did yesterday was rally back to 2,800 and then sold off late in the session. And that's why the yen is also approaching a line I've had drawn for probably 2 months now or so. I believe it's going to be a magnet, and we're not that far away. We could be there by maybe today, early next week, 107.80. At this point, I'll be looking for some type of top in bonds. But getting back to the S&Ps, and there's your 200-day. Okay, so it tried to hold it. It was eaten into it. Not a good close, not a good week. You know, bulls will say this is just going to be a correction, maybe down to, 26.40. I'm sure there's going to be some bounces. Maybe we take this low out first at 720 and then try and recover. But even some of the bulls that are looking for sharply higher stock prices when the Fed flips and they're not just on hold, but they launch some type of QE, are looking for things like this. It's possible 61.8 back, 25.70. I'm sure there's going to be some type of pop here. The market needs $1 to weaken, so that's underway. Okay, and the yen's almost at that target, and maybe the market needs bonds to top and yields to bottom, and the inversion of the yield curve begin to do the opposite of inversion. And what's that? When yields they're getting more for the front end. Anyone know? Because we haven't heard about it for a while. And that will help the banks. So here's a look on the yield of the 10-year and the 30-year. Oh, while I'm scrolling down here, euro pound at new highs. Okay, thought that might happen. I'm not going to fight that, try and top pick that. Okay, so 10-year yields, we're actually experiencing throwovers in the 10-year. So here's your line, 3-drive line. Yeah, I think I talked about it yesterday. So what you do on a throwover is just let it do its thing and then look for it to re-enter the wedge. And that's a signal. So, and the 30-year, even more acceleration on the throwover. Okay, so I think we're getting close, maybe another 3. And some people are talking 213 10-year, 210, 202, but we're getting close, and that's why I bring up the yen, because this could still, despite how ugly the yen looks here, just be a pullback in a bull market, right? I mean, this isn't going to damage what happened here, and this whole thing could be corrective, and then we get something like this from here. With a bond top, you're going to want to be looking at buying breaks in US dollar yen. Everyone get that? That's a correlation. And also the gold should peak on this as well. So metals had a great week. The gold more than silver. So US dollar yen bottoms and gold tops. This could be a great short next week, looking at this. So I hope you guys had a good week. How about it, ping pong? Some great calls made by the crew all week. I think this is the last day or the last weekend for this, guys. So discounts. You know, we may offer a discount. Don't discount all the hard work we do here for you as a community. Of course, it's in hopes that after you see our work for a while, you're going to want to reciprocate and become part of our community. So if you haven't yet, maybe it's time to say thank you. That's a two-way street in life. Otherwise, you end up like that, what's that song? Runaway Train. Runaway train going the wrong way on a one-way track. No, I'm not kidding about anything here, Nelson. I'm serious. For education section, where you could learn about different types of analysis, all of these, and put together by our team, let alone once you log in and the whole world opens up for you. There's the world. The only reason you'd ever need to leave our website is to execute a trade. Okay, so just making you aware of it. We probably won't have any promos. Let's see, I've been here over 2.5 years. Probably I'd say maybe the end of summer, something like that. You know, everyone does something in the fall. Maybe something in the summer. We'll see. Anyway, so you can look for confluence, a lot of neutrals here in Euro. And don't forget to talk to our friends. Okay, you know, we do business with friends. If you've noticed, a lot of the guests I bring in, I've interviewed them a few times. You know what? They're not just my guests, they're also my friends. And the people I work with, they're not just, you know, contemporaries or, you know, my associates. They're my friends. And you know what, guys? I know this is not about pips, but there's no higher form of love than friendship. Okay? Even if it's romantic and everything is there, if you're not best friends with your spouse, and then it's just an arrangement, in my opinion. So that's my look on the markets. Everyone enjoy Black Friday. Thank you, Gwen. I love you. And so I'm going to turn it over to one of my good friends. You know, you work with people and you get to know them, and you know, we all, you know, have our ups and downs in life. And I'm so lucky that Blake and Steve and Stell started this service and wanted me. So I hope everyone has a great session to wrap up the week. Everyone wanted volatility. We've got it now. So let's have a great wrap up the spring going into June and build ourselves up so that we're capitalizing all summer long, and Blake is taking over.
Good morning, Dale.
My buddy. Go ahead.
You know, I remember when Steve and Stelios and I were embarking on this development process of putting together ForexAnalytix. So when we were in the building process of this platform and the community, this is about 3 years ago, maybe. And I remember sitting out in my backyard, reaching out to you for the very first time, talking to you on the phone, and telling you that I want you to be a part of this, that we're building it. And at that point in time, you were with FX Street, and you know, things were you were already starting to you know, kind of being open to looking for a new home. So I'm glad that it all ended up working out.
Yeah.
and you ended up coming over as we completed the product, because you've been a great addition to the team, and so we're really happy to have you part of it.
Thank you, bro.
All right. So with that being said, what a crazy night. So let's first of all, I
You
have to
know
go
what
back.
drove it, Blake, last night? I mean, I'm sitting here.
Yeah. I
What
know.
was it? What?
Yeah, it was the tariffs that were launched on
Against Mexico?
on Mexico. Yeah, you
Oh my
know, but the thing about these tariffs, now understand that the tariffs are not economically targeted. They are politically motivated.
Yeah, because of immigration.
Because of immigration, yeah.
It's crazy.
You put on tariffs on a friend and a neighbor country, not because, you know, trade deal, but this is it's Donald Trump's method of getting what he wants. It's like, well, I'll just, you know, I'm the tariff man, so I'm just going to apply tariffs wherever I need to get what I want done, whether it's economically and now politically motivated. And we can sit here and argue, you know, whether or not immigration's an issue. Listen, I live in Arizona. I live in a bordering state to Mexico. So I get the immigration issue and how sensitive it is, living where I live.
But you don't equate an economic thing with a political stance.
I don't think so. And so you might have seen a tweet that I put out last night that said, if you guys follow me via Twitter, I was saying, you know, I don't know if I really want to own dollars in general now, because when you shift.
Great point.
You shift from what he's doing from an economic standpoint to more of a political gain, or towards a political goal gain, whatever you want to look at it. I don't know if I really want to own dollars anymore. Now that doesn't necessarily mean that I'm shorting the US dollar Mexican peso. Actually, I traded it to the long side last night, made some good money. When this news came out, I did a few things. First of all, I was long Aussie yen. I was also long the New Zealand US dollar. So what I did as soon as that news came out was right about here. I mean, by the time I reacted to it, because I happened to be in front of my computer, I saw the headline. I'm thinking to myself, what the fudgesicle is that? And I'm like, oh, that's
what
not
I was
good.
thinking.
And so I sold my Aussie yen. I took that off the table. I sold it, got out. It took a loss. You know what I always tell you guys? It's okay to be wrong. It's not okay to stay wrong. So, you know, and I was down a little bit because my average on the Aussie yen long was like at 75.80 around here. And so by the time I got out of it, I took like a 25 pip loss on a pretty decent sized position. And then I was long the New Zealand dollar I've been long all like week long. I owned it from like 30, right?
Mm-hmm.
And when that news came out, it was right here. Was it right here? I guess whenever it happened overnight. No, it was right here at 65.10. I took that off, and I took like a 25 pip loss there. But at the same time, and this is where, you know, what I do might be a little different than what you do, and I have a hard time switching directions most of the time. I really do. When something, you know, for like a lot of people, and one of the strengths that I have as a trader is I know my weaknesses, and my weakness is I'm not very good at this. Let me just show you really quick. I'm not very good at like selling here, buying here, selling here, buying here. I don't do well in that. What I do a lot more efficiently in the market is sell here, cover somewhere down here, then reshort here, you know, cover down here somewhere, you know, things like that. I tend to trade with the trend. However, last night it was obviously news related. So what I did with the Aussie yen, as soon as that news came out here, I turned around and I shorted pretty aggressively the Aussie yen, and I ended up closing it like right here. But I also at the same time I shorted the euro yen, you know, like right here. covered that like somewhere around here. I shorted the dollar yen at like here, and I covered it like somewhere around here. So but I aggressively went short because if you watched the futures last night, the futures were absolutely coming unglued. So you know, if you saw the futures right after he made that announcement, we were doing this, you know, and just kept going, and it just kept selling off. And so at that point I was like, okay, well, I need to turn around and be short. There's a reason. Again, the reason why I typically have a tough time going in opposite directions, you know, buying and selling, is because usually I have a theme that I'm trading on. So therefore, if I'm short risk, let's say, I'm good at, you know, just kind of shorting it, covering, reshorting, you know, on bounces, or vice versa if I'm going long risk. So yesterday was more of news related, and which allowed me to take those positions in the Aussie yen and the euro yen and everything else. So now, you know, also last night what I did is I turned around and went long the euro. So when that news came out, it was like right around here, right here. When we were down here, I went long the euro, and went long pretty aggressive because, like I said, I tweeted that I don't know if I really want to own dollars at this point. And but you have to be really careful with when you sell dollars, where do you sell it against? And that's the point I'm going to try to make right now. It's not like I'm out shorting the US dollar Canadian. I'm not shorting the US dollar Mexican peso. The timing of his comments were pretty, how should I say, it's unique, because what happens is he's actually making these comments during a period when Congress is trying to pass this USMCA NAFTA deal. The problem is that deal is probably going to be in jeopardy, not only with Congress, but also with the Mexican Parliament as well. I believe it's Parliament, but anyway, with their legislators. So the problem is I don't think I want to buy short dollars against certain currencies, but there are certain currencies that I do want to be long instead of short. Instead of long dollars, I'd rather be short dollars, and some of those would be like the euro, which I went long the euro. I ended up getting out of it last night for a little bit of a profit because I just wanted to sleep. You know, I should, you know, obviously in retrospect, I go, oh, well, you know, if I would have hung on that position, I'd be up pretty big this morning, because I was long pretty aggressively down here, but I, you know, took a little bit of profits, and I ended up doing pretty well last night when I went to bed. But you know, I look at like the pound. It's like the pound's getting hit. You know, I don't even know why the cable's getting hit as bad as it is at this point. Everything that we know is pretty much out in the open. We know about Brexit. We know that we're going to have a change in leadership. We know that it's going to continue to drag on. But all that's known. You know, I look at the pound, and I think the pound is, you know, just stopping out, you know, some you know, weak hands down here personally. But I actually look around and I'm like, I think I want to be actually short the dollar against certain currencies, the dollar yen being one of them too. Obviously the news overnight is bearish for risk, so the dollar yen is one of those candidates. Now if you take what I say plainly, you know, you're going to have a difficult time, because if you're trying to buy the Aussie or buy the Kiwi, that might be a little bit more of a difficult task, being that we're in the middle of a trade war with China. If you're trying to buy the or buy the Canadian or buy the peso, you know, that might be another difficult task. If you're you know, now that we're starting a whole new, I don't even know what you want to call it, with Mexico and Canada, because is it a trade war? Is it immigration war? Is it, well, I don't know, but there are friends and allies, but I don't know if you really want to be long those currencies. So you got to be a little bit more careful about what you're doing. And really, if you want to just bypass all of the garbage and you want to say, well, I don't want to even deal with the dollar, then I think there's some better currencies that you can actually trade, like the Euro Mexican peso. This could be a really nice, bullish. I haven't done work on this chart in a while, but this could be a really nice bullish move in the Euro Mexican peso. You could trade like maybe the Euro Aussie on the long side, after we held this support. I've been trying to short the Euro New Zealand up here, but I am a little concerned about it because I think the Euro might start outperforming here. I might, if we get any higher than where we're at, I might have to, scrap that idea at this point. But there's the Euro New Zealand. If you want to play the Pound Aussie just hit the 88% retracement. The Pound Aussie might be a decent trade. The Pound New Zealand, this could be, we're holding above the 200-day moving average right now. I don't know if we're going to break it based on the risk aversion that we have going on. This might actually be, more of a long side candidate down here on the Pound New Zealand. I'm not long it right now. I'm just kind of talking at the moment. But what I'm saying is if you're going to be short the dollar, you have to do it strategically. You can't just blindly go out and short the dollar, because you might find yourself in a much tougher situation trying to do something like that. So again, let me reiterate. If you're out there saying, and if you have the kind of attitude I have, which is, man, I just don't know if I want to own dollars anymore because things are getting a little erratic with our administration. Not like they haven't been already, but it's worsening, and you have to sit there and ask yourself, do I really want to be even involved in the dollar? And if you want to have exposure somewhere else, you have to do it strategically. And you look at the euro and you go, well, the euro's got its own problems. Have you guys seen Deutsche Bank, the stock? I mean, we're just getting creamed here. I mean, I don't know if Deutsche Bank is the right position, but maybe you look at currencies like the pound. Maybe the pound is this is a decent value proposition here because we already know everything there is to know about Brexit. Well, at least a lot of it's known. Maybe you start buying the Swedish krona. You notice how the U.S. dollar Swedish krona has really been underperforming regarding the dollar. You've had the dollar that's been near trend highs. The U.S. dollar Swedish krona is not. It's actually been underperforming for the last couple of weeks. Maybe Sweden is where you want to be. Maybe Switzerland is where you want to be. I know it's expensive to hold dollar Swiss shorts or Swiss longs, but this is very similar to the Swedish krona in the way it's been reacting. So again, or maybe the yen. Obviously, the yen is the obvious choice because the dollar yen is actually now below 109. So, and in my opinion, it looks like the dollar yen is going a lot lower. It looks like we're going to be trading back down below 108. I'd like to sell this on a rally today if we can get a move back to 109. Personally, I just don't know if we're going to see it. It's hard for me just to outright start selling it here after such a big move. I mean, we've had a really big move overnight, but I ultimately think I want to be short the dollar, the dollar yen. And again, if you want to be long the dollars, there might be better places to be long the dollar, maybe against the Canadian, maybe against the peso, maybe against the Aussie. So this is a point in time where I think you have to be a little bit more strategic about where you're buying and selling dollars versus just blindly doing a basket of dollars of dollar currencies. So anyway, just some thoughts about what's happening this morning. I do want to pass it over to my colleagues here in just a second, but before I do that, I do want to also mention that Look, as Dale said, we don't offer specials on ForexAnalytix that often. If you want to be part of this community, and let me just grab the chat room. You guys can all say hi. Here's the chat room. You guys are all on Jumbotron, and you can see there's us in there, Pauly, you know, Stelios, Burskman is a new listener. There's Simon, there's Benedict, there's Iris. I mean, you guys think you're all funny. There's Rick, Jack from South Africa. There's Chief from New York. I mean, and you can see there's, you know, about 100 of us in here. We post a lot of charts. We post a lot of funny stuff. There's Amir. We really, but we talk a lot about, you know, obviously the markets and what's going on. And if you were there last night, you knew exactly what I was doing at, you know, 9 p.m. Eastern last night, roughly, when all this was happening. You knew that I was, you know, turning around shorting the Aussie yen and you know, all those other things. So anyway, just a few words for those of you that are not part of our community. You know, buy 1 month, get 1 month free. You get a 20% discount on semi-annual plans. You get a 25% discount on annual subscriptions to be part of our exclusive community. You can download the mobile app. I don't know any other analysis platform that even has a mobile app. You can download the mobile apps on iOS or your Google Play Store on your Samsung device or whatever you got. And this way you have all of our analysis, chat rooms, and everything on mobile. So take advantage of that, because we are the offer goes dark today. In other words, after today, you're not going to be able to see that deal or any type of deal for maybe several months, maybe September. We may end up pushing it back till December. We'll figure it out as we go. We only do this a few times a year. So anyway. I'm going to pass it over to Steve and Stelios, because we do have Canadian GDP this morning. You got to watch the Canadian. I think any move back to 135.20 is going to be some pretty decent support, especially if the GDP number comes in strong. If that thing comes in weak, we have a weak GDP number, we could end up having a pretty big rally in the US dollar Canadian, since it is breaking out. But also we have PCE coming out, inflation data, which is going to be important for the market to watch as well. So guys and gals, I'm going to pass it over to Steve and Stelios. Good morning, guys.
Good morning.
Morning, Blake.
Hey, how you guys doing?
Very well. It's summer here already.
It's summer here too. We were enjoying the beautiful weather up until this week, and then it started to get hot. So.
Oh, it's summer here too in San Diego. It's going to be 78 today.
Blah blah blah. Dude, don't need to go there.
That warm sun and cool ocean breeze, it's hard to handle.
Sometimes. God, it's Friday. All right, guys. Hey, have a great one. Everybody have a great remainder of your weekend. I'll see the rest of you guys, or remainder of the day. I'll see the rest of you guys in the chat room, for those of you that are part of the community. Have a great one. All right. See you guys.
You too, Blake. Good hunting. Hello. Good morning, Steve's plural.
Hello.
Good morning,
How are you guys?
Okay. Very well. We have some data in 1 minute. So we have core PCE out of the US and CAD GDP. I think those are the main ones.
I have them here.
Okay. I have a couple of things to say, but I'm not going to go through them within 50 seconds. So maybe I'll mention first, we had the Chinese manufacturing PMI overnight, which was expected to dip just in contraction territory at 49.1, actually came in at 49.4. So that's not good. You know, the psychological level of 50 has been breached, and manufacturing, obviously a key part of the Chinese economy. So that's one to watch for sure. Okay, the rest I'm going to go through after the numbers. So let's get USD CAD. Okay, that's the one you have already. Good.
10 seconds before the standby.
Yes, there we go.
Okay,
I like
let's see. Okay, any second now.
And
there we go. So let's see what we have.
core PCE in line.
Canadian GDP quite a lot lower Quarter
Well,
on
month
quarter,
month on month it's higher. Quarter on quarter is lower.
quarter on quarter is quite a lot lower, actually, 0.4 versus 0.7. Producer prices quite a lot higher, 0.8 versus 0.3 expected. US consumption a little bit higher than expected, 0.3 versus 0.2. US personal income higher, 0.5 versus 0.3. And US core PCE price index, as expected, revised a little bit higher. So
Not much happening on
I don't think that, yeah, but you know, I don't think there is anything to stop the USD CAD from continuing higher here. It's currently testing a resistance zone, but as I have been saying since a couple of days ago, I have my eyes set on 136.60 as a nice confluence of resistances. I have to admit, on the other hand, that you know, USD CAD is not doing that good to the upside in comparison to the big sell-off that we had in crude once again. So crude, as I expected yesterday, breached through this 58 zone decisively, and today tested the 55 support area, which was the next area of interest. Seems to be stalling here for now, but you know, for now is the key word here. A bridge below 55, in essence, opens the door for a move 52, even lower than 52 actually. So you know, people should be very, very careful here, because crude is in essence flirting now with a much bigger sell-off if it loses this support area as well. Stelio,
Yes.
what
Okay.
else did we have?
Yes, I have a couple of things to say. Okay, first of all, okay, we covered the Mexico tariffs, and you know, I've been thinking about it, and it seems that President Trump has a very aggressive, well, he does have a very aggressive strategy. Maybe it will work out, and in 10 years' time, we're going to look back and say, you know, this took, you know, balls basically to do, and it got the result. But it's quite aggressive, and Mexico's President Obrador did respond, and he said that disputes must be resolved by dialogue. There's no point in coercive measures, and you know, it kind of makes sense. But Trump is quite you know, in your face with these things. He just does what he wants to do, and he's going to see the result afterwards.
Anyone know the Yiddish word mashugana? Do you know what it means? Mashugana?
No.
Okay,
No?
like a crazy person. Anyway, you know, actually, I know we're not supposed to get political and everything, but yesterday he said Russia didn't win the election for him. I did. Not the voters that put him in. He won it. Let's fasten your seatbelts, guys. All right?
Yeah.
Yeah. Anyway, may you live in interesting times was a curse from Shakespeare, right, Steve?
Indeed.
Yes.
Yeah.
So two other things. We had some Euro data, and it was not good. You know, we had German retail sales month on month expected at 0.4, came in at minus 2%. German CPI missed. It was all on the slightly weak side, but the euro is quite resilient. And the other interesting
one of the reasons I think it's resilient, Stelio, is the fact, if you remember, I said yesterday in the chat room as well that I expect, actually I might have only said it in the chat room, I was showing charts saying that the cable has more room to move to the downside for equality of legs, but the euro pound seems that it has more upside. So I expected the pound to underperform the euro pound for at least a few days. I like
the roadmap, bro. The nice roadmap.
Yeah, and as it seems, the euro pound is pushing higher, and as you know, Stelio, the euro pound is one of the most liquid currency pairs. So I do think that you know, euro pound strength is helping you know, the euro stay afloat.
Yes, no, fair enough. A very good point. Yes. So one more thing I wanted to mention was that I was looking yesterday at the Fed Fund futures curve, and I was having a look at what the market's pricing in, and by the end
almost
of
3 rate cuts.
3 cuts basically by the end of 2020.
Almost, not exactly,
Yeah,
but
but,
almost.
yeah, plus or minus a couple of basis points.
I think like 60, 67,
Whatever.
68 basis points, something like that. It's pricing in,
Okay.
yeah.
Isn't that ironic, guys? Well, I mean, you saw Greg's looks the other day in the Skype room, and I think that we're entering a blow-off top situation here in bonds and TLT. Isn't it ironic that the market is looking for, these eases when we might be putting in some type of high developing in interest rate futures?
Personally,
Well,
still, as I said yesterday, Coach, unquestionably, the sentiment is quite bullish, very bullish. Bonds at the moment. There's nobody that can doubt that.
Right.
But I don't really see any signs of reversal.
No, I don't either.
Personally, I said it yesterday again that I take into account the DSI reading. But DSI extreme readings can also be resolved by a pullback, just a pullback.
Right.
I mean,
I was just looking at the form, Steve, that this could be
or by
the end of
consolidation.
ABC. Yeah.
Right. Yeah. Okay.
ABC.
It can.
Yeah.
It definitely can. But
I think it will.
Okay, it definitely can. And if we have a look at, let's look at the yields, which are even more clear here, the 10-year yields, which hit the 161.8% extension. It can, as you say. It is a rather mature move from these highs here, but no real indication that that we're bottoming out here. So
yes.
Instead of jumping the gun, I would rather see some kind of a big reaction or some kind of a bottoming formation being built before I start looking for a low in yields or a high in bonds. Keep in mind, since the conversation went to bonds, Stelio, I don't know if you saw, I was expecting that since a few days ago. Bonds are at all-time highs, and which means that now
10 years below 3% as well. That's
yeah.
Yeah.
Yeah, I was always looking for an opportunity to lend the U.S. public sector some money for 3%. Not so bonds at all-time highs, which means that you now actually have the opportunity to lend your money to Germany for a cost of 0.2%.
Yeah, for a cost.
Yeah, no, for a 0.2% negative yield,
right?
For 10 years, which is
adding fees,
unbelievable.
Stuff like that is going to be even more negative. But
which is amazing, simply amazing.
Yeah, the thing I wanted to say about the US is that I was looking at the Fed funds, and it was almost 3 cuts priced in, and then you have to think about what is the Fed thinking, right? And the Fed 6 months ago, they were on autopilot. We're still hiking. We're gonna reduce the balance sheet.
Yeah, the balance sheet.
Yesterday we had Richard Clarida, who is the vice chair, and he said, the economy is doing well. I mean, he can't say the economy is doing badly yet, but he said it's doing okay. But he outlined what he thought would be the reasons for them to cut. And this is the first time, I think, that anybody, Clarida is the vice chair, pretty important person.
Was S&P 2200 one of his reasons?
Probably the first one, Coach.
He's not going to say it, but it is. But he said that the persistent shortfall in inflation below 2%. Well, core PCE at 1.6% and dropping, and also a material downside risk to the U.S. outlook from the global economy. Check, both of them. So they're not saying, "Oh, we're going to cut," but could they cut 3 times by the end of next year? Absolutely, I think so. It's not.
It's not only that, Stelio. It is very, very likely that they won't need to cut 3 times to get to minus 75 basis points from where we are. And keep that into consideration.
Yes. And we've seen them do it. We've seen them cut 50 at a time or more. So if it's needed, they're going to be there, especially if stocks start, well, if they continue towards, S&P goes anywhere near 2300, man, it's going to be
needed is a very rich word. I wouldn't use it, because if they actually, if central banks actually did what was needed, we wouldn't have all those booms and busts. We wouldn't have all those bubbles around us. They actually do what, they do what is politically convenient. They don't do what is needed for the economy, unfortunately. That's a big problem.
Yes.
Because what is needed is for this monetary experiment joke to finish and to let the economy actually function properly. And then, after a big bust, which is inevitable at some point with all they've been doing, we're going to have more normal business cycles again, with more normal expansions and more normal downturns, which is a natural ebb and a flow of how things are supposed to be working. But they don't want to see that, because they want to have expansions that last to eternity, which is impossible, and then somebody has to bear the cost of that.
Yeah. Okay, so that's it from me.
Okay, cool. So let's see, because we have quite a lot of charts to look at, because as Blake mentioned at the beginning, it was an interesting night. Euro Swiss bullish spot daily. I have no idea, but if Andre is listening in, I bet he can answer. I'm not into harmonics. Andre is our harmonic specialist. I can tell you one thing for sure, is that you don't need to be a harmonics expert to see that Euro Swiss is once again at a support area. So if bad pattern is a bullish reversal pattern, which I'm guessing it is, yeah, sure, why not? Anyhow, I see every reason why somebody would want to be long here. The risk-reward ratio is extremely appealing. As you see, this area has acted as support multiple times, and we can easily rebound once again and move towards the resistance area, which is roughly at 114.50. Now, obviously, as long as risk is off, it's not going to be easy for the Euro Swiss to get unglued from this area of support, and there's always the danger that it's actually going to slice through it and move lower. On the other hand, you have a decent chance that if you want to be long here, besides a very appealing risk-reward ratio, and besides the fact that if risk off softens and we get some risk on again, then you're definitely on the right side of the market. You also have a very decent chance that the S&P is going to be working on your favor, because I'm pretty sure that one of the reasons we've spent some time in this range is also the S&P. So it's a good thing having a central bank, having your back in this case, right? So I see every reason why somebody would want to be long here. Now, let me go back to the USD/MXN, because yes, it was the biggest mover probably of the night, after Blake already covered what happened overnight. Trump imposed even more tariffs on US citizens, because that's exactly how this is. The tariffs are always being paid by the people that buy the imported items. Yes, that eventually can break or damages the exporting party as well, because their products become less competitive. So it's more likely that consumers are going to go for other products. Will that stimulate the US industry? Probably not, because the US doesn't produce several things in many industries. So I don't think that the US is going to start producing things that it hasn't been producing for decades, just because imported items have become somewhat more expensive. But there might be other imported items that are competitive. Of course, if they're from China, they're also being burdened by tariffs as well. So it's a tricky situation there. In any case, USD/MXN finally broke above this confluence of resistances at 1930. and extended almost to the next resistance area. Keep in mind that this looks like a nice impulsive move, so I would understand why somebody would want to be buying any type of a pullback. But what remains as a fact, and it's going to be the exact opposite situation, it's the exact same situation, but opposite sides for the USD yen that we're going to see after this. Despite this move higher, the USD MXN remains trapped within a long-term symmetrical triangle. You can see it here. And the symmetrical triangle's resistance is somewhat higher, currently passes roughly from 2022, 2023, which means that any kind of move, within the boundaries of this symmetrical triangle doesn't really produce any big technical event to talk about. Okay, so that's something to definitely take into account. As I said, breaking above 1930 was a technical breakout and the development, but within the boundaries of this symmetrical triangle. So, in all actuality, we need to, to be careful and not have, very, very high expectations because of the reason I mentioned. And the exact same situation, opposite side, applies for the USD yen. You can see why if I zoom out. The USD yen resumed to the downside, which is not a surprise. I expected a resumption lower. The problem being, though, that despite this big overnight move, we are still above this almost confluence now, because every single day this triangle trend line is moving higher and higher. Now almost confluences with a 50% fib from this spike low, which is roughly at 108.50. As you see, this is going to be a huge, huge technical level. And, if it was in isolation, if we didn't have this longer term formation, it would be very easy for me to have sorted it already. But I remain very skeptical, and I won't be doing so just because of that reason. There is a big chance that this triangle is going to produce support, and you don't really want to be sorting right at multi-year support. So risk reward isn't really here. Now, if we do see a breakdown from there, that is definitely going to be a major technical event, and I think it's going to have major implications in a lot of markets, not only Forex. Okay. Now, we have a question about the euro pound. I showed it before. It was expected that the euro pound is going to resume higher. Why was it expected? Simply because this was a textbook. I was showing this on the chat room yesterday. This was a textbook triangle. Okay. So you always expect a triangle to break out in the direction of the prior trend, which is exactly what happened. On the other hand, you would also expect that there is a high probability that this move higher, as you see here, the RSI breakout also confirms the exact same thing that you're seeing here. Now, the problem, though, being that usually triangles are consolidation. Yeah, consolidations before a last thrust to the upside, which means that now that we have satisfied that, I would definitely not be buying into this mature move higher unless we have a stronger pullback. That's why I drew yesterday, or perhaps it was even before that, this
great call
on the chart, that I expected break higher, but following that, I would expect a deeper pullback to at least retest this breakout area at 87.20, 87.30, which means don't get caught buying so late on this move. It really makes no sense. We've had literally a one-way street move that brought the pair 4.5% higher, which for currencies, that's a huge move within the these few days, especially considering that euro pound is a currency pair that has usually a very small average true range, because euro and pound are quite a lot correlated.
They're cousins.
Yeah, they're cousins.
Kissing
Exactly.
cousins.
Exactly. I guess it does, yeah. So these kind of moves or these kind of pairs are quite quite outstanding. I mean, it's not something you see happening every day. So this is my outlook for and my viewpoint for euro pound. Speaking of the euro pound, let's have a look of what's happening with the pound. I wouldn't be selling the pound here, obviously. I think it needs guts to try to buy it, though. You can see it even on the daily chart. We have a 1, 2, 3, 4, 5.
Yeah, and you called that yesterday, Steve. I paid attention to it because there were all kinds of divergences. But you said this is a 4 with a 5 to come to take out that low. Great call.
Yeah, and confluence of supports here, and an ideal 1 equals 5 target coming at 125.40. We almost made it there today. The lows of the day was roughly at 125.60. So, okay, ballpark, we were there. I mean, 20 pips here, 20 pips there. What is that among friends, right?
I say close enough for government work.
Yeah, exactly. So, bottom line, although I wouldn't advise somebody to be buying it here unless you know how to handle, counter trend trading. But usually, you need to know what you're doing to trade counter trend. I would definitely not be selling it down here. Let me make that very, very clear, right? I wouldn't be selling it here. Exactly as I said with the euro pound, this move now looks quite mature. And I think that even a corrective pullback can easily bring us back towards 128, 128.60, both of them 127.80 to 128.60. Actually, this area has several resistances. So I think people should be very, very cautious about that. Even some mean reversion, I mean, as you see, the daily RSI is the second time within a few days that is hitting oversold territory, should be sufficient to produce some type of a pullback, which can easily be like 200, 250, 280 pips, and still remain in bear mode. Okay, so this is my outlook for those two pairs. Now, having to do with the Euro USD, it's obviously holding better, and one of the reasons, as I mentioned before, is what is happening with euro pound. It's actually trying to post, if we zoom out here on the daily, you will see that it's actually trying to post here a morning star formation on the daily chart, which is going to be a very interesting way to close the week and the month, right? Keep that in mind.
Yeah.
Today is the last day of the week. It's also the last day of the month.
And
so
quarter.
That's going to be
is it?
No.
No. And century.
Yeah, and century, yes. Happy millennium, everyone.
I think Blake said we were also at the end of the quarter being June, the end of June, right?
Yeah, it's the end of June.
Okay.
So I'm paying quite close attention to that.
Blake.
Keep in mind also, Coach, as you see here, this 111.10 area has already acted as support in multiple occasions recently, while the daily RSI is clearly diverging, right? Yeah. I mean, the previous low of the daily RSI was at 38, quite decently above the oversold territory. Okay. So, for all these reasons, I would be quite careful here with the dollar index, which we've been, talking about before. Let's move to that, and here we are. So even a potential triple top for somebody that wants to look at it, there it is. Now, is this a triple top? No, it isn't. Why isn't it? Because we still haven't violated the uptrend. Okay.
Where's that come in? 97.20-ish, something like that?
I would say that with this ascending trend line ascending, and with this previous low here being at 97.03, 97.05, whatever it is, I would say that a move below there will most likely accelerate developments to the downside. Obviously, And, one way or another, it's quite obvious that there is a loss of momentum. Of course, there is always the possibility of some explosive acceleration to the upside to break above this. There is always a possibility because we remain in an uptrend. But if we break below 97, I would start being extremely careful being long the dollar.
Especially with how crowded the long side is.
Yes,
Yeah.
exactly.
Okay, buddy.
Exactly. So I would still remain very, very cautious with the dollar. But as I've been saying for several days, I'm not ready to sell it, right? I'm not buying it, in any way. There's no question about it, but I'm definitely not ready to sell it. I think it's a little bit dangerous because, as I said, there is always the possibility of a breakout from this area of resistance and an acceleration higher, because you can be more than certain that after spending, several days consolidating with this resistance in place, there are several stop losses that have accumulated above that area. At least one, as you, Dale, would say, right?
Yeah, at least there's one above 98.30 something.
Yeah. There is. Coach, give me 10 seconds because I need to plug in my headphones because they're running out of battery. Give me.
Okay, sure. So everyone, have a good weekend, Face. Enjoy the guests. Enjoy Steve. Steve really gives one of the best reviews of the board I've seen in the industry. We're lucky.
So, thank you, Coach. So, this is what I see with the dollar index. Obviously, we have some pullback today. And one of the major beneficiaries, especially because of the combination with the risk of mood, has been gold, which isn't really putting in place any major candlestick to talk about, but it is so far probing the area above this descending trend line. But as I said, I want to see this previous high being taken out for me to to start looking higher. Alternatively, a move below 1265. So I think you need to be a little bit patient. There is a chance that we're going to close the week and the month still trapped within this 1265, 1300, 1301 area. But I really want to see what's going to happen, especially first days of the month. Monday, Tuesday. I really want to see if we're going to have some development there because
gold silver ratio could be making a new high here.
Of course it is. Of course it is pushing higher. I mean, there's no question about it. Here it is. It's not making a high in the sense that we had that spike there, but it might actually have an all-time high close right today. It might.
Right.
So yeah, it still keeps pushing higher. Clearly above this wedge, although it depends on how you want to draw it, because if you decide, to take that spike into consideration when you draw it.
Oh. Yeah, and it's up against a 2008 high, Steve. You'd have to pull up a monthly to see that, but that's what we're approaching.
Let's see. Oh, yeah, actually, we have been higher. Yeah, you're right. We have been higher. That is right. We have been higher indeed. Actually, the high was.
Oh yeah, in the 90s.
Almost literally at 100, at 100 to 1 ratio. Yeah.
Wow.
At the highs actually, which was at 90, gold was valued 100 times silver. Okay, that's quite interesting.
3 drive.
Okay.
I see them everywhere. In my sleep, I'm seeing 3 drives now, Steve.
Copper, by the way, still on its way lower. We've already covered this multiple times. Platinum, no respite here, on its way to 778. And silver, unchanged on the day. So as you see, it's not really benefiting from this move. Still being capped by this descending trend line resistance. I would definitely want to see a move above 1460, as I was saying yesterday, but even to be more sure about above 1480, that would make me more comfortable, for looking upside targets. Keep in mind that to this 1480 area, we now have both the 50 and the 200 daily moving average is converging there as well. So I think that's going to prove to be quite an important level. Keep in mind that, in my opinion, having to do with long-term opportunities, especially considering that silver is a tangible asset. It's an item. It's a commodity with intrinsic value, and considering that usually commodities tend to have fat tails to the right-hand side, I think that very low prices give you long-term buying opportunities. Personally, I think that silver is much closer to a good buying opportunity than to anything else. Can it move lower from here? Yes, it absolutely can. It can even make it to single digits, that low that we had over there. But I do think that accumulating some in physical form especially, is definitely going to prove a good long-term investment. Silver cannot go to zero. Gold cannot go to zero. They cannot even go near those levels for multiple reasons. They will always retain their value because they actually have multiple real-life applications and a lot of interesting physical how's it called?
Properties.
Yeah, properties. Yes, that's the word I was looking for. Thank you very much.
It also has eons of time to build the case before the United States of America was even an idea by thousands of years. So
absolutely tested and accepted by humanity as real money for eons, as you said, Coach.
Yeah.
So that counts for something. Now, we had a question about the pound yen, and the pound yen was a magnificent trading opportunity. Unfortunately, I didn't take that. I was involved with other stuff. I have no complaint. It went well. It was a nice rectangle. When it broke to the downside, that was the target. The green line you see here, we actually penetrated through that green target. And, we keep on moving lower in a very, very impulsive manner. As you see, the daily RSI having reached 18 is definitely a testament to that. We're now slicing through the 61.8. So two things here. First of all, yeah, you shouldn't be selling it here because where would you put your, where would you put your stop loss? And what would your target be? So it makes no sense. Now, can it still move lower? Yeah, it absolutely can. In any case, I would definitely think that the market is going to be looking to sell any type of a decent rebound here. 138.10 is probably first area of resistance I would be looking for. So it remains bearish, and it is what it is. As I said, too late to try to catch a train to the downside, not from where we currently are, but definitely no reason to believe that it can't move lower from here. Especially if you see the USD yen for any reason break through that multi-year symmetrical triangle, then you can expect the vast majority of the yen pairs to be decimated, literally decimated. Okay. DXY, we covered that. Why USD and Euro are both strong at the same time today. I wouldn't say that the DXY is strong. The DXY is lower today, actually. Yeah. What about palladium? Nothing to mention about palladium because palladium is still consolidating here. I mean, it has rebounded slightly, but it can still, resume lower. We might have found a tradable low at this spike low here, but the evidence are not enough yet because the price action since has been quite choppy. So I would remain quite careful with palladium here. Personally, I wouldn't be shorting or buying it at current levels. I don't see the risk reward, and I don't even see any real clarity from a technical perspective. So I would, I'm still holding 1/3 of my initial short position. I'm deep in the money, so I don't have to take such a decision at the moment. But if I had no position, I would definitely not look to to add such a position here. My pleasure, Antonia.
You have groupies. Don't tell your wife.
I think she's.
She knows you have groupies, but she's your #1 fan.
Yeah, I think she's.
Oh, you hesitated.
She has no reason not to feel safe. We've been together for a century, and all is well. USDs are still above this triangle, currently consolidating at an important area of resistance, both a 61.8% fib from that move lower, and as you see, this also is an area of support resistance. My intuition tells me that path of least resistance remains to the upside. Okay, for a move perhaps towards that 61. So that's what I think. As long as we remain above 1445, I think that the path of least resistance remains higher. Now, I know they're not very popular, and I'm going to finish up with those. But since Blake mentioned the Euro MXN before, I want to show a few Euro pairs, and I want to start by the Euro MXN. The Euro MXN is actually within this formation. You can view it as a descending wedge. Okay. So in my opinion, that would be quite an interesting breakout to the upside if we break out above that, because that would probably lead to a much bigger appreciation. Now, another euro pair that I wanted us to have a look at is the euro NOK. I know that Stelios loves the euro NOK. I know that he loves to be short the euro NOK, but euro NOK seems to be breaking above this little pennant here, which would tell me that there is a very decent chance that we're going to push higher once again, perhaps towards this. As you see, this is a multi-year ascending wedge, so towards resistance once again. That would be a very interesting area to be short, but in the short term, I think that we're looking at a possible bullish breakout that can extend, even if we want to measure an equality target from this low to this high to this low. Voila, this actually targets the highs, as you see, very close to that previous high and to that ascending wedges resistance. Okay, so I think that a move towards 10.05 is very, very likely. And Eurosec, another one I wanted us to have a look at, as you see, ascending wedge as well, but within that maintains a bullish bias. So far it's holding this previous low, this previous high as a low. The 50 DMA is also there. I'm also monitoring this ascending trend line. So that's it. Those were a few bonus pairs. Let me finish up by saying that you only have the weekend to take advantage of this offer. The next one is going to be in September, end of September, as we usually do. So take advantage of that. The offer is going to be done by the end of the weekend, and then you'll have to pay full price. I think the buy 1 month, get 1 month free if you're not sure is a great opportunity for you to test out our services for 2 months just by paying for one and become part of our community. Coach, thank you very much for tolerating with me for another week, and we'll see everybody again on Monday.
Okay, go ahead, do our tagline.
Don't just count your pips, count your blessings. Have a lovely weekend.
Yes, everyone. Ditto. Enjoy. Adios. And come hang out with us in the chat room after Face. And we're giving you a discount to do it. Surround yourself with traders better than you, and you're going to get a lot of support in there. You might even make a friend, find a husband, maybe a wife, a date. Who knows, huh? Anyway, that's it, guys. Have a great weekend. Thank you, everyone. Adios. Thank you, Steve. Thank you, Stel. Thank you, Blake.
Let me remember to say something last.
Sure.
The link, we should have said it earlier. The link to Face Webinar and the platform for the Face Webinar is going to change starting on Monday. We're moving on Zoom. We've already moved the rest of the webinars. We're very happy. It's a better product. So you're going to receive an email, a reminder email that's going to have the new link. Make sure you follow that to join us on Monday. Thank you, Coach.
Okay, buddy. All right, so everyone, see you in the new room powered by Zoom. Our accounts are going to go boom in there, all right? And I mean good boom, not bad boom. So enjoy Black Friday, everyone, and see everyone on Black Monday. All right? And then turn around Tuesday. Adios.